Well, I think the first set of stimulus packages were all placed with the expectation that this was a 4-week, 6-week, 8-week shutdown, and that at the end the economy would return to the levels we had before. I think what we see now is that the downturn is longer than we'd anticipated then, and the recovery path is less steep. And so, you could use the plate over a pothole analogy, you could use the bridge over a river analogy, but regardless, we've got a lot more people in trouble now than we had hoped we would have 4 months ago, and a lot of them are in need.
We've seen some pretty dire projections of what a removal of the at least full $600 benefit would do to consumption. Do you have any problem with those numbers that would imply a bigger hit to consumption than we saw during the Great Recession?
Well, across the stimulus payments and the unemployment insurance, they obviously both have gone to people at the lower end of the income spectrum, which is great. It's also the case that folks with lower incomes spend a higher percentage of what they get. And so the money that has been transferred there, I think the data would show, has gone directly into the economy. And I think that has been helpful to us.
At the same time, you got, as Leader McConnell told us this morning, a caucus that is starting to worry about the debt and the price of fiscal support. Kaplan's on the tape right now saying asset purchases are not free and may ultimately have an effect on the dollar. We don't want to do more than we have to. As we hear more of that commentary bubble up, what do you think that does to chances on the Hill that we do get some kind of compromise?
I don't know about chances on the Hill. My read of what I hear is that both parties are interested in doing important stuff for people who are in need. And I just always keep coming back to the fact that we have 11% unemployment right now. That's the highest it's been other than the last few months since the Great Depression. And I think it's important to support those families that are in need. I'll defer to Congress on how to do that.
President Barkin, it's weekly jobless claims that have provided the most real-time snapshot of what the labor market looks like. We have had our 20th week above 1 million claims, but it was better than expected this week, and it did decline again. And I'm wondering if you believe that's because the virus is easing in places like Arizona and Texas, and if that's a trend that could continue.
Well, I've been hoping for reductions in initial employment claims for multiple weeks now. A reminder, the highest week we'd ever had before this crisis was in 1982, just under 700,000. And it's been, even after the first few weeks, it's been in the 1.3, 1.4 range now for quite some time. So I really welcome it coming down to the 1.2. And I guess I'm hopeful that initial claims are going to moderate even further here. I think that'd be a very good sign for us.
We have sort of two different discussions when we talk about the economy. One, the health of the consumer and the worker at home. The other, the health of the corporation. The Federal Reserve had set up programs to help corporate America and middle market companies specifically through the Main Street Lending Program. But Politico says only a handful of companies have been able to access that. At what point do you think the terms should change so more companies can get that money?
Well, I've been encouraged on the corporate and the middle market side with people's ability to get access to credit. You'll remember our programs are designed to be backstop programs for when markets fail. And I think markets are working fine right now. I think it is important to have those programs available in case they don't. For example, if the economy were to worsen. On the Main Street program in particular, we've said we are open to seeing how they're taken up and iterating the terms as appropriate based on what we learn.
The Chair Powell, earlier this summer said he was open to changing the terms as they go along and see what the level of interest is. He said he could consider that this fall. Are those conversations happening?
Well, I think that's what I was just referencing. I think we're open to learning what we see in the marketplace. Designing these things are pretty unprecedented. It's hard to get the terms of them exactly right into the sweet spot. We are getting some interest, and I'm sure if there are things that are consistent with the date we've got and that are agreed upon between us and the Treasury that can get money to the right sort of people, we'd be more than happy to work those.